What's up everyone, it's Rico here. Today I want to dive into two well-known players in the REIT space, Realty Income, ticker symbol O, and Agree Realty, ticker symbol ADC. Both of these companies have been getting a lot of attention this year, and for good reason. They offer some compelling opportunities for investors looking to add real estate exposure to their portfolios. And stick around because at the end of this video, I'll share how I'm personally invested in these stocks and why I've chosen to allocate my portfolio the way that I have. Let's start with how they performed this year. So, Realty Income has shown strong performance in 2024 after a rough and tumble past 2 years. There's a year-to-date growth so far of 9.82% as the data is recording. And this comes after the stock took a significant beating in 2023, largely due to rising interest rates and market volatility affecting REITs overall. However, Realty Income has rebounded nicely this year, reflecting renewed investor confidence and its ability to maintain consistent monthly dividend payouts. This rebound is a testament to the solid fundamentals and the reliability it offers as an income-generating investment. Agree Realty, on the other hand, has had an even more impressive run with a year-to-date growth of 18.85%. This substantial growth highlights the market's recognition of ADC's focused strategy on high-quality, recession-resistant tenants. The company's aggressive acquisition strategy and solid fundamentals have driven its stock performance, making it an attractive option for investors seeking both growth and income. Now, let's talk about that dividend yield. Realty Income is currently offering a dividend yield of about 5.03%, maintaining its reputation as a reliable income generator. Investors love this consistent monthly dividend, which is a hallmark of Realty Income's appeal. They even coined themselves the monthly income stock. Agree Realty, their dividend yield is around 4.02%. So while this yield is slightly lower than Realty Income's, ADC has been steadily increasing its dividend over time. They're showing a commitment to returning value to its shareholders. So even though Realty Income has shown it for longer, ADC is not far behind. Okay, now let's talk about some pros and cons. When it comes to pros, Realty Income's biggest strength lies in its stability and reliability. It has a diverse portfolio with over 12,000 properties spread across multiple sectors like retail, industrial, and healthcare. This diversification helps cushion against sector-specific downturns. Plus, that monthly dividend, investors love that predictability. However, a con for Realty Income could be its size. It is a behemoth, which means its growth might not be as explosive as smaller, more nimble REITs. Also, its heavy exposure to retail properties, even with diversification, poses some risks, especially as consumer behavior shifts to more towards e-commerce. Agree Realty, on the flip side, is more focused on retail properties, but it's not your typical retail. ADC focuses on high-quality, recession-resistant tenants like grocery stores, pharmacies, and home improvement stores. Think of the big names like Walmart and Home Depot. This focus gives it a defensive edge in uncertain economic times. The downside? It's still relatively small and growing, which means it carries a bit more risk, and its dividend isn't monthly like Realty Income's, though it's been steadily increasing. Which would I recommend? It really depends on your investment goals. I know, never the answer you want to hear, but hear me out. If you're looking for stability and consistent monthly income, Realty Income's a tried and true choice. But if you're open to a bit more risk for potentially higher growth and are okay with quarterly dividends, Agree Realty might be worth considering. Personally, I've allocated 2% of my portfolio to Realty Income, leveraging its stability as a bedrock investment. But I've been gradually increasing my stake in Agree Realty. I'm currently at 1% and adding more whenever I see a good opportunity, mainly because I see a lot of growth potential there. And with ADC's strong performance this year, I'm planning to continue adding to my position throughout the rest of the year, along with participating in a dividend reinvestment program, DRIP, to automatically increase my holdings. And I do that for both. Okay, so to sum up, both Realty Income and Agree Realty have their merits. It really comes down to what you value more as an investor: stability and monthly income, or growth potential with a slight trade-off in yield. And now, as promised, here's a bit of insight into my own strategy. I've been invested into Realty Income for years and have enjoyed the consistent dividends, which is why it's a larger portion of my portfolio. But this year I've started adding Agree Realty because I believe in their growth story and the quality of their tenants. So if you're thinking about adding either of these stocks in your portfolio, consider what aligns best with your investment strategy. And as always, do your own research or consult with a financial advisor. I'm just a dude on YouTube, so this is by no means financial advice. So, thanks for watching. Don't forget to like, share, and subscribe for more insights on investing and leadership. Take care, be well, and I'll see you next time.